Hello and good morning, everyone, and welcome to the PayPal/SoFi earnings report call coverage with myself and my other co-host here, Roy Crossroads. Welcome. Good morning.
Good morning. Good to see you. Early one.
For
Double
you.
report.
Yeah, double report. Pretty good, actually. Pretty good, actually. We are going to cover PayPal's earnings call, but we might also we could also just have a quick glance at SoFi's one, since SoFi's report, since we both own it. So you had made any predictions before going into this SoFi earnings report?
I did. It looks like where I was off, I was a little bit ambitious on the top line revenue growth. So they came in huge beat, 44% year over year revenue growth, which we knew it was going to be in the 40s. I mean, the analysts didn't, but the analysts are usually softballing. Anyway, guidance, of course, they guide softly, but it was a triple beat. So huge smashing beat in revenue, I think, is going to get a lot of eyeballs on the stock and the company. You know, a lot of people maybe are looking at SoFi or reconsidering for the first time. Now, it was against a weaker year over year comp, but when you report 44% year over year revenue growth, that doesn't matter. Like, they're just excellent performance. The stock, I'm sure it's probably still up now, but it immediately spiked just because it was a huge beat, raised guidance, and of course the EPS was a beat as well. So growing on all cylinders. There's some good notes there on additional loan securitization on the lending platform as well. So just a quick glance at their earnings this morning. Very, very good. So that's why I'm focused on PayPal, because I'm like, it's going to probably be more mixed.
Yep.
And I feel like this is the last challenging quarter, just because of some headwinds and some things. But yeah, what did you think of SoFi's results?
I mean, I like it. I had my predictions as well, and they blew past those expectations. More members, even the technology platform generating $110 million. That's 15% year over year growth. I still had it at 10%, so at 105 million or so. So that came in surprisingly well. Revenue again much higher, and so now very, very good quarter. EPS at 8 cents. Yeah, we can see this right here.
Yeah.
It's another excellent quarter by SoFi, and I think guidance has been revised as well on the
They
upside.
did, yes.
So here, triple beat for SoFi, and unlike the last couple of times, we actually are going up. So for now, we are going up. So yeah, I mean, the market is definitely going to start paying attention to this one. So Very, very good. Very, very good reports
The net
across the board.
income, especially there, was just a nice, yeah, tangible book value. It's kind of a joke, but that's the way that you measure banks. It's more than just a bank. But yeah, this is a really really good quarter.
Yeah.
I'll go through the numbers more in detail, after we get a chance later today. But oops, yeah, really excellent. This is going to get a lot of eyeballs on the stock. So
Yeah, I mean, not bad for a bank, right? No, not
yeah,
bad for for a bank that is
yeah.
growing 44%.
Banks growing 44% of this size, no, that doesn't happen. So it's more than a bank. Noto did stress 3 or 4 weeks before the earnings that they're doing more than half of their revenue from non-lending sources. It's technically true. Now, a lot of those are financial services platform, which is fueled by lending just because of the loan platform business. But nevertheless, it's true. They're continuing to diversify more and more away from lending, which honestly, you tend to get a higher multiple in that environment. So I think that you'll see, a combination of things, just phenomenal growth. Guidance is raised. They're becoming not just barely profitable, but quite profitable. And that's accelerating. And also, you see that mix shift in revenue, more tech platform than I anticipated. I actually thought it would be slightly down, more non lending sources as well. And you tend to get a higher multiple just because there's not the risk there that there would be of default or credit risk. So,
Yeah, I mean, the fee based revenue is already at 44% or so. So once
yeah.
that gets past 50%, things are going to get quite interesting. Quite interesting. Very, 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 very fast for Sofi. I mean, the loan platform business and the financial services side of things, it's growing super fast.
Yeah. And yeah, Pain Pal.
Yeah, let's have a look at our second favorite. Let's say our second favorite pain pal. Let me pull up the slides real quick. Now that's SoFi, that's pain pal. So here it is. Now, like you said, all in all, good quarter, right? Beat across the board. Guidance was also raised as well. Stock's initial reaction was down 4% or something, but I think right now we're only down 1.2,
Yeah.
1.3. But all in all, I mean, this is basically the main overview. Another quarter of profitable growth, transaction margin dollars, X interest on customer balances up 8%, strengthening PayPal value proposition, branded experiences TPV up 8% as well, branded online checkout TPV is up 5%. Then you've got mid-teens percent global transactions on new checkout, over 20% Venmo revenue growth, and I think that's the highest
Driver.
growth in a long time for them,
Oh, yeah.
which is great. Alex Chris, I mean, has been saying, look, Venmo is an incredible asset. We're just not monetizing this enough. And I mean, PayPal has been doing a very, very good job since he came in to turn this thing around. A 60% debit card TPV growth, and then Braintree TPV returning to growth, I think is very important. I think that's something that's going to be asked during the earnings call a couple of times, right? Because this was previously growing quite quickly, not that profitable, then slowing down very, very fast to become more profitable. And now we're entering that phase of durable growth, which I think is going to be quite important. Then we actually had, like you said, you made a post about this. Usually we are entering a quiet period before the earnings report, but it seems like SoFi PayPal has been making quite a lot of announcements over the last week or so, right? We have Pay with Crypto. We've had the PayPal World, which was huge last week. We had the Wix announcement as well. So, I mean, they're making moves. I think Alex Chris is going to talk on X tomorrow or 2 days from now. So they're definitely making moves. And then here, strong first half, raising fiscal year 25 transaction margin dollars and EPS guidance. And so, I mean, all in all, I'm quite happy with those numbers. We will of course look at the rest of it all. Any specific slides you wanted to touch on?
Yeah, so that one right there is good. Just showing the acceleration in Venmo. And at the very top, you'll see the advancing strategic growth drivers. You'll have the win checkout, scale Omni and grow Venmo, drive PSP profitability, scale next gen growth vectors. That's something like we'll talk about the numbers. We'll hear the earnings call in a second. this is one of those fundamental changes that Alex Chris has brought, where there's a clear vision, clear targets, clear focus as far as what they're actually aiming for each year. Uh, Under Dan Schulman, there wasn't this. Instead, PayPal was trying to do everything. It was confusing, like even to the extent where previously Venmo and PayPal would compete for the same merchant, for the same user, and it was like, and Venmo was at a lower take rate. It's just so chaotic and messy. You couldn't even send money from Venmo to PayPal. This turnaround has taken longer than I expected. This I see as frankly, it's the last challenging quarter. Quarter three, I don't think will be nearly the challenge. Now, macro can always surprise us, but Venmo here specifically, they mention it. Yay, it's green. It should be. Like, these are good, solid results. These are not like blow away type of results, which frankly SoFi did. Like, incredible. These are very good, and I think they're probably going to be the worst for the rest of the year. So, like with Venmo specifically, when Alex Chris came over, a lot of people were like, "Well, maybe just divest from Venmo. You can't, drive value or growth out of it." And this is also probably going to be the least exciting quarter that Venmo reports, which is phenomenal, by the way, over the next year, just because you're going to start seeing, if you scroll, it's either a slide before or after. You're right there. Yes. The Big 10 and Big 12 partnerships. This is something Alex Chris announced. We'll actually see this in August and keep an eye as far as, those downloads in the App Store, just to see what this looks like. But these are massive college campuses. I believe about 700,000 students. Now, student athletes are being paid, of course, through PayPal. They'll have access to Venmo, these special cards. But there's these partnerships which look like that they run and integrate very, very deep in these massive college campuses. And so you're going to see a lot of acceleration in Venmo. And of course, in the first half, I believe in January in next year, Venmo is now able to be used anywhere PayPal is accepted, or WeChat Pay, or Mercado Libre, or well, they call them. I can't think of the name that
Pago.
Thank you, Mercado Pago. Yeah, I knew you knew it, but that's going to be a massive growth driver as well. And the great thing is that this is not at the cost of taking away some from branded PayPal, and it's a lower take rate or anything like that. It just excellent growth. We also will see, this is the last quarter of the full headwinds, and I'm sure that they'll comment on this. I think that there still are some in quarter three of that Braintree strategy where they're shifting away from top line revenue growth at all costs to bottom line. So 5% headwind growth to revenue. That was actually the biggest surprise to me so far, looking at these early numbers, Neil, beyond the lumpiness of free cash flow, which was not amazing. I was expecting actually a lot smaller top line revenue growth. And frankly, like the market was guiding for that as well. And even PayPal guided for that. And instead we saw, what was it, a 5% revenue growth year over year, which is, top line revenue is not the most important thing, but it still is important. And it is important for the market as well. The quarter two, this is page 10. If you go to page 10 itself, 6% overall year over year growth, and 5% dollar neutral. That's actually also very interesting too, is the United States dollar was weak. The DXY is actually below 100, below parity. And so if that continues, they'll actually report for the first time in a long time, continue to report revenue like that's actually the same dollar neutral versus where it is today, just because they're such an international company. So very interesting.
Yeah, no, I agree. The explanation they give us here for free cash flow and even adjusted free cash flow is just impacted from shifts in working capital. But I do wonder what that exactly means.
Yeah, look at the footnote 3. It says adjusted free cash flow excludes the net impact from timing differences between originating European buy now, pay later, receivables classified as held for sale, and subsequent sell. See slide 29. So this might be one of those things like they had last year with KKR, or actually it's 2023, where just because of the timing of it, the free cash flow shifted from quarter 3 to quarter 4. So it made quarter 4 look ridiculous and quarter 3 look terrible. But that's the lumpiness of free cash flow. You can look at it at a year over year basis, but each and every quarter you could read too much there. So
yeah,
$1 billion as far as free cash flow itself in quarter 3. And adjusted is $1 billion there too. Oh, that's 2023. Okay.
Yeah, so net cash provided by operating activity was just under 900 million, and then they have here an impact of 206. So free cash flow 692.
Yeah, I still don't see why it was
Yeah, it's not really
lower.
telling us. Just the net cash provided by operating activities is just much lower this quarter.
And they've got a breakout slide on free cash flow on page 23. Shifts in working capital timing. Yeah. I'm sure that they'll comment on it. If they don't, they should, but analysts will ask. If not, I'll reach out to IR. We'll get some clarification on what that means. But yeah, just because they continue to say on the trailing 12-month basis, $6 billion,
Yeah.
they've not reduced or changed their guidance as far as free cash flow for the year. So no concerns there, just a like, I wonder what's going on there. So
No, for sure. Let's see, because guidance, we can actually look at that as well. Hasn't changed, right? Free cash flow still $6 to $7 billion. Share repurchases around $6 billion. So as long as that doesn't change to the downside,
yeah,
I'll be fine. I'll be fine with that. But yeah, they've raised transaction margin dollars, EPS guidance. So I mean, it was a good quarter. It was a good quarter. We are going to have a look at all the other numbers here. More people are using PayPal today than ever before, right? Active accounts have increased 2% year over year to 438 million. Last quarter was 36, then 34, I believe. So there still is quite a lot of room to grow. There are definitely some things that I've highlighted here. Let's see. So we have total take rate is basically flat quarter over quarter. So at least it's not coming down much more for now. Total take rate at 1.87% and transaction take rate 1.68%. Same as last quarter, but of course still down year over year. As for, let's see. So active accounts, as you can see here, has been making its way back up to record amounts. Same for monthly active accounts, also grew 2%, 226 million. Number of payment transactions, that is dropping. That did drop 5%. They say it right here, reflecting price to value actions driving a lower Braintree transactions. And then we have also this number, where is it? Transactions per active accounts, also coming down 4% for the year.
Yeah, I like that they break it out in that last line, TPAX, the payment
PSP,
service processing,
yeah.
that's Braintree. That's actually up a little bit. So,
Yeah.
it's something to keep an eye on. But as that headwind abates, again, I still think that there's a little bit in quarter 3, but by quarter 4, that'll go away. And it's expected. So, yeah, it's not bad.
Yeah, not bad at all. Transaction margin dollars continues to do very well. I think that's the metric that Alex Chris wanted to see recover and go up. Has been doing quite well. Transaction margin did drop quarter over quarter back to 46.4%, still up 62 basis points year over year though.
Yeah. Yeah, there's some movement both ways there. I was actually expecting that to go up and increase just because of Braintree margin strategy.
Yeah.
So I hope that they do comment on that. But yeah, it's with a lot of these metrics too, like there's some seasonality features. So it's not uncommon to see it not move in a straight direction, up or down, whatever it is, but have some lumpiness, kind of like free cash flow as well. So
other than that, I don't know if I've taken some notes. No, I think that's it for me for now.
Page 24, that one's interesting to look at too. The hedging impacts. Now, this is probably something nobody really cares about, but in essence, just because the dollar's been so strong in a company that is this exposed to international markets, they do some currency hedging as well. And of course, the dollar was significantly weaker, and usually it's been the other case. So you can see in quarter 1 and quarter 4, they actually had some benefit. Quarter 2 of 2024 last year as well from these hedging. Here they took a negative hit of $70 million. Now that's not massive for PayPal specifically from the hedging impact, but as the dollar continues to trade at least at parity or maybe even a little bit softer, it usually means that they'll hedge a little bit less and less, and so we'll actually see some acceleration there as well. Yeah, net charge-offs actually look pretty good too, so that's nice to see.
Yeah. For those wondering, yeah, free cash flow. We hope to get an answer during the earnings call. What exactly went on there? But other than that, pretty happy with the quarter. I think we both agree that the turnaround is taking a bit longer than expected, but I think once it happens, it happens quite quickly because they're putting all of the necessary pieces correctly. Lots of announcements more recently, lots and lots of
Oh yeah.
announcements, partnerships. So I do hope we get to hear a bit more about advertising this time, because last quarter we heard literally nothing. I think one
Yeah.
one sentence was mentioned about advertising, but that's about it.
I, I think we might get that too. Maybe two sentences this time. I think next quarter is when they start mentioning it more, and by quarter four, as fast as they have announced some massive partnerships as it relates to advertising, and so by quarter four, the revenue might actually be meaningful enough that they comment on that directly. But yeah, any information that we get is better than nothing. And actually, slide 19 is really interesting too because it's showing what's happening here. I think maybe more clearly than anything else. If you look at like the weakest segment was, of course, that payment service provider. That's Braintree, which historically in the past has been the opposite. And so the issue, if you guys are not that familiar with PayPal, is the prior strategy was, hey, let's practically give away Braintree, the payment service processing. And so, of course, it accelerated rapidly. But if you look at free cash flow, if you look at transaction margin dollars, all that was flat to down. Margins were down. It's just not a strategy that was working. And so they last year, it was either quarter one or quarter two, they announced like, hey, we're actually entering these conversations with these major merchants in exchange for lower volume. We're getting higher margin and higher rates. That's going to come at a cost of top line revenue. And so if you look at all of these categories, branded experiences, Venmo itself, branded checkout, which I mean, I'd like to see it above 5%, but it's still growing. It's nice to see that basically this strategy is working. That revenue is actually coming in a little bit better than expected, and I see it doesn't look crazy to see double-digit growth by early next year. Could even be in quarter four, though that's probably a little bit early just because a headwind of about 5% growth overall to the entire top line of revenue is going away and dissipating. The stiffest remaining headwinds were this quarter. And yeah, quarter three will actually see some acceleration there or more acceleration in Braintree. So that'll be not at the hit towards margin. So very good.
Yeah, and I think that's maybe when the narrative might change, right? Because that's also when you will actually see it black on white or blue on white, depending on the colors that we will be using. That this thing is, oh, actually, it's not growing at 2% anymore. It's actually accelerating, and then in Q4, that's going to be even more apparent because Q4 is usually a good quarter, and then we lap those easy quarters next year. And so yeah, those are tailwinds.
Page 18, by the way, the other value added services revenue, it's up 16%.
Yeah, that's been going up
Yeah,
very quickly.
that's really good. And that's one of the interesting things about some of these newer products that they're launching, like PayPal World, is it makes an easy setup for that other value added services. Of course, as and when Fastlane is monetized next year, or beginning to be monetized, we'll see that continue to increase. They're actually leveraging their data for a lot of these products for the OVAS. But yeah, they've been talking about it, making improvements in the actual product, but actually seeing that double-digit growth is really important. I think that's good.
And there was one. Let's see if I can find it. Let's see. So it says basically here, driven primarily by strong performance in consumer and merchant credits for OVAS. I mean, this thing alone could generate them $1 billion a quarter
Yeah,
in the next year, which is not bad, not
yeah,
bad at all.
and I mean that's a neat thing is they have a lot of these different growth vectors. Some like easy layups, like the Venmo, the monetization there that's happening, the omni-channel push over in Germany and internationally, and of course in the United States too. But then they have advertising, which I mean that's really, I think, going to begin accelerating in quarter 3, maybe not to the point where they break out the revenue, but quarter 4, quarter 1 next year. That can ramp really rapidly, especially under the team that they have that. So, um, yeah, lots of opportunity here. So, yeah, I could be wrong, but I was calling this beforehand. I was like, hey, I think this is the last challenging quarter just because, that top line revenue growth, which is actually better than I expected. The market is in a mode right now where it really focuses on guidance, but also the top line revenue growth is very important to the market right now, more so than bottom line, which is doing well. But yeah, can't wait for these comments.
Yeah, plus, I mean, with all the announcement that they've been making, they're positioning the company quite well to be very well positioned for the holiday season.
Oh yeah,
And so I think that they'll surprise us even more in the back half of this year, or of course the first quarter that we're going to see in calendar 26, but still fiscal 25. I think that's going to be quite a good quarter for the company. We do have 4 more minutes until the music starts. So let's see, because we have here a lot of comments about apparently Novo Nordisk either reported or stock is down 20%. Let's see if they reported, or maybe I think someone said they pulled guidance for the year. Yeah, so they cut full year sales and profits guidance. That's why. Let's see what we have. Novo Nordisk drops as GLP-1 headwinds prompt guidance cut. Aha. So what does that mean for a company like HIMS?
yeah. Novo Nordisk, like, it makes
Good
sense
point.
not to me now. It didn't at the time why they're getting rid of their CEO. It's like, okay, yeah, they've really tripped and stumbled. Like the
Yeah.
biggest classic example was, Canada, where they like didn't even refile for the patent of their GLP-1 product, and so in January, Hims gets a launch, not generic knockoff. What they can launch the real stuff in Canada, not just Hims but others as well, just because they didn't pay what like is under $500, so they're losing billions of dollars in revenue. You can't do that as a company and expect shareholders to be happy. So.
Yeah, no, HIMS is only down 2.5%, so
Yeah.
not not that bad.
It's
Let's
wow.
yeah. Yeah, so it's basically after cutting sales outlook for on Wegovy. On Wegovy, I don't see anything about a new CEO. I mean, maybe they're still. I know they did name a new CEO. Okay, so I guess we'll have to do a little bit of research who that guy is, because yeah, the previous one didn't do the job correctly.
Yeah. Oh, the other thing that I noticed from the slide too is $1.5 billion for share repurchases. So they didn't accelerate it, which I don't think is shocking. I wouldn't have minded it with that big dip in April if they're like, you know what, let's just double down and get this out. Actually accelerate that a little bit earlier. But yeah.
Yeah, no, I agree. I mean, I wouldn't mind them like taking advantage of the situation and just buy back more. Buy back more. You have enough cash, so why not
But
accelerate it? But I
yeah,
guess
but
there's
it
a
always
plan.
makes sense in hindsight. They might have been like, well, if we get below like 53, then we will. But you don't never know how those conversations go, and that was quite a quick turnaround too. So
Yeah. Plus, maybe there's just a plan that they follow, and whatever happens with the stock happens. But yeah, I do think that once when the stock is just so cheap, just accelerate it, because why not?
yeah,
Um, Let me make sure I have the music in my ears. Register. Okay, it's still lobby music, so I'll put it on once that's gone, so we don't get copyright striked. Even though I highly doubt anyone will strike us for that type of music.
yeah.
Um,
All right, PayPal is down 1.79 now, 2% as we got past that 8 o'clock time for Eastern Time Zone. Tends to be a
ah,
little bit more volume that comes in. SoFi is up just a little bit.
And I will be your
So
conference operator today.
We have
As a reminder, this
some
conference is being
music.
recorded.
Some
I would now like to turn the program over to your host for today's conference, Steve Winokur, Chief Investor Relations Officer. Please go ahead.
Thanks, Regina. Welcome to PayPal's second quarter earnings call. I'm joined by CEO Alex Chriss and Chief Financial and Operating Officer Jamie Miller. Our remarks today include forward-looking statements that involve risks and uncertainties. Actual results may differ materially from these statements. Our commentary is based on our best view of the world and our businesses as we see them today. As described in our earnings press release, SEC filings, and on our website, those elements may change as the world changes. Over to you, Alex.
Thank you, Steve. We had a strong quarter, delivering profitable growth and building momentum in transforming PayPal from a payments company into a dynamic commerce platform. Fintech is in its infancy, and we believe the next 5 years are likely to see more change in how people shop than the last 2 decades combined. As the largest two-sided open platform in the world, we have the unique advantage of connecting hundreds of millions of consumers and merchants of every size to unlock entirely new, deeply personalized shopping experiences. With PayPal's unmatched scale and trusted brands, our strategy is laser-focused on anticipating and fulfilling what customers need today and what they'll expect tomorrow, whether they're buying online, in-store, or through AI agents. Our execution is fast and focused. We are strengthening PayPal's value proposition to bring in new customers, increase engagement, and create strong partnerships with merchants. We are also attracting top brands and developers as we innovate and shape the future of commerce. The traction we are seeing across our initiatives continues to give us confidence that PayPal's growth will accelerate in line with our 3-year outlook. Turning to our second quarter performance, we delivered our 6th consecutive quarter of profitable growth despite the macro uncertainty. Transaction margin dollars grew 8%, excluding interest on customer balances. Success across many of our strategic initiatives contributed to that growth, including online and offline branded experiences, payment services, and Venmo. This highlights a healthy business with multiple avenues to sustain and accelerate growth, and non-GAAP earnings per share increased 18% year-over-year. We continue to build upon our broad reach and strong engagement. Both total active accounts and monthly active accounts grew 2% in the quarter. Transactions per active account ex-PSP grew 4% as more people use PayPal and Venmo more often. If we look at our 4 strategic growth drivers, winning checkout, scaling Omni and growing Venmo, driving PSP profitability, and scaling our next-gen growth vectors, we are making meaningful and tangible progress on all 4. I'd like to walk through each one, highlighting examples of our progress. The first 2 growth drivers are entirely focused on improving and growing our branded experiences. I'm proud that we drove 8% currency-neutral growth in branded experiences TPV this quarter. This positive result reflects the benefit of meeting our customers wherever they choose to shop with PayPal and Venmo, online and offline. As a reminder, branded experiences includes winning checkout, expanding Buy Now, Pay Later, winning with Venmo, and scaling omni-channel capabilities. Starting with online branded checkout, TPV, including PayPal, BNPL, and Pay with Venmo, grew 5% currency neutral in the second quarter, consistent with what we've been seeing over the past year. Our upgraded experiences are driving the uplift we expected, and most of our merchants and consumers are behaving consistently with recent quarters. At the same time, we offset headwinds from platforms and merchants in Asia, where we saw volumes decelerate following the implementation of tariffs. Our focus is on the things that are within our control and that we know will have a positive impact on our overall growth trajectory over time. That starts with driving more traffic through our upgraded checkout experiences, both in the US and internationally. These upgrades offer a much better consumer experience, improve presentment of BNPL, and drive meaningful conversion rate improvements. This is currently rolling out in the US, Germany, and the UK, and we have a comprehensive playbook that we will apply to other countries. Around mid-teens% of our global transactions are now on our latest experience, including more than 60% of our U.S. checkout transactions. We are also investing in key use cases like subscriptions to drive repeat branded checkout use. Many of these efforts that are contributing to growth this year will continue to ramp into next year and add to our confidence that we are on track to achieve our growth outlook for branded checkout TPV. Turning to Buy Now, Pay Later, BNPL continues to deliver strong growth quarter after quarter. In the second quarter, BNPL volume grew more than 20%, and monthly active accounts climbed 18%. When consumers choose BNPL, their average order value is more than 80% higher than a standard branded checkout transaction. Why are we winning customers in BNPL? Put simply, scale, ease of use, and customer value. Our BNPL solutions are available nearly everywhere PayPal is accepted in our largest markets. That makes us the most broadly distributed BNPL solution in the market. Merchants can offer flexible payment options that drive higher sales, all seamlessly integrated within the PayPal ecosystem, no extra tech work, and often at a lower cost than with standalone BNPL providers. Merchants unlock the real power of our BNPL solutions when they add awareness messaging upstream on their product pages. Merchants choose to feature PayPal BNPL upstream because we offer a trusted name brand option that is already bundled with our comprehensive suite of branded payment options. Ace Hardware is a great example. After adopting this upstream messaging and offering a 0% APR promotion, they saw a 35% year-over-year increase in total PayPal sales and a 7-fold increase in average order values. Today, we offer BNPL in 9 global markets. We will continue to expand to more markets throughout the year and launch additional marketing to boost awareness and adoption. Next, Venmo. When I joined nearly 2 years ago, the big question was, can you grow Venmo? Today, the answer is a resounding yes, and you're starting to see it in our results. Venmo delivered another outstanding quarter, showcasing some of our best growth in years. In Q2, we grew Venmo revenue by more than 20%, marking our highest revenue growth rate since 2023. TPV grew 12%, accelerating quarter over quarter to the highest growth rate in 3 years. This momentum stems from deliberate product innovations over the past year and dynamic marketing campaigns that are repositioning Venmo from a peer-to-peer payment tool to an everyday commerce platform. The result is that our Venmo user base is not just growing, it's engaging in commerce with Venmo. Our recently announced Big 12 and Big 10 college distribution deals will fuel this further. Not only will college athletes be able to receive institutional revenue share payments through PayPal or Venmo, but the Venmo brand will be embedded in some of the most iconic matchups in college sports. We've released new co-branded Venmo debit cards, and Venmo will also be working with the Big 12 and Big 10 to enable acceptance for campus spending, including at bookstores, for ticketing, concessions, and merchandise, giving students more flexibility to shop and pay with the app they already use every day. These deals leverage our strong reach with the college-age demographic to put Venmo everywhere across college campuses. Pay with Venmo TPV was up more than 45% in the quarter, and we achieved an approximately 25% increase in Pay with Venmo monthly active accounts as our merchant network continues to broaden. Leading brands that resonate with Venmo's valuable demographic, like Sephora, KFC, Taco Bell, and Pizza Hut, are adding Pay with Venmo in their apps, making it easier than ever for users to spend their Venmo balance wherever they shop. On the Omni front, Venmo debit card monthly active accounts were up more than 40% as a result of our newly redesigned and simplified onboarding. This is a great business, and Venmo's potential is significant. Our team is fully focused on unlocking even greater growth ahead. Turning to our omnichannel strategy, we are seeing strong momentum. Debit card TPV across PayPal and Venmo grew more than 60%, while monthly active accounts grew more than 65%. Adoption is strong and accelerating, with another approximately 2 million first-time PayPal and Venmo debit card users in the quarter in the US. In Q2, we launched a new physical card for PayPal Credit, our digital credit line product. This new card is an extension of the existing PayPal credit product, allowing users to access their credit line both online and, for the first time, in physical stores. The card also provides access to promotional financing offers, including 6 months of interest-free financing on travel purchases. This new card is in addition to our PayPal Cashback MasterCard, which offers 3% back on all purchases through online branded checkout. Our strategy focuses on getting our card products into the hands of even more of our customers, aiming to grow our share of wallet through options that can power every payment our customers make. This, on its own, is a massive opportunity for PayPal and an area where we can drive penetration much, much higher. And that is before the flywheel benefit for branded checkout. Our data underscores the benefits of this approach. Customers who adopt one of our card products transact more frequently, choose PayPal more often when shopping online, and deliver higher average revenue per account. Following the strong momentum from our US launch last year, we took PayPal Everywhere to Germany in June with groundbreaking innovations. We launched the first ever PayPal contactless mobile NFC wallet on iOS and Android, introduced flexible Pay Later to Go for BNPL offline, and delivered in-app cashback offers at over 2,000 stores. To amplify the launch, Will Ferrell teamed up with us again for our largest marketing campaign yet in Germany. We already have more than 3 million NFC enrollments and are seeing impressive engagement trends. It's very exciting to see this kind of traction so early, and we are on track to expand to the UK this year. The outcome of all this progress and momentum is that we drove 8% currency-neutral growth in branded experiences TPV this quarter, and we have confidence that we can continue to grow this moving forward. Each pillar of our branded experiences is a thriving business on its own, and combined, they position us for sustainable, long-term growth and success. Finally, I'd like to explain how last week's announcement of PayPal World will be a game changer for our branded experiences. Digital wallets have become ubiquitous and the standard for making a payment or sending money worldwide. Today, almost 3.5 billion people rely on digital wallets as their go-to method for shopping and transferring funds. That's 83% of global digital payments happening through wallets, and the number is only going to continue growing. There will be over 5 billion wallets globally by 2026. But among those billions of users, there are hundreds of regional wallets represented. This fragmented system of wallets poses tremendous challenges and immense friction in a global commerce ecosystem. For consumers, it means you are never quite sure if and where your wallet will be accepted. Even for wallets like PayPal, with tremendous global reach, there are large regions of the world and millions of merchants that are closed off. For many users with regional wallets, traveling out of the country poses new challenges with spotty or no acceptance, and the need to create and keep track of multiple wallets just to interact with the world. And while P2P payments should be easy, the need for a common wallet between users often makes it impossible to send money to friends or family around the world. For businesses, it means building the technology to accept dozens of wallets, which adds unnecessary costs and creates a fractured experience full of friction for customers, ultimately limiting reach and, of course, sales. When you want to sell to the world, how do you choose which wallets to accept and which customers to turn away? You shouldn't have to make that choice. This is where PayPal World comes in, to make it simple and easy to connect any consumer with any merchant. 5 of the largest digital wallets in the world, PayPal, Venmo, Mercado Pago, TenPay Global, and UPI, are coming together on a seamless global platform, so you can now use your preferred wallet anywhere in the world. For our PayPal merchants, PayPal World will mean access to billions of new customers through their existing branded checkout integration. Now, a UPI user in India who wants to buy a pair of sneakers from an online store in Germany that accepts PayPal can simply click the PayPal button at checkout, and their familiar UPI button will be presented for them to complete the transaction. It's that simple. This means our connections for branded checkout will extend beyond our 400 million customers to more than 2 billion consumers worldwide, and that will continue to grow. Whether you're sending money to a friend or relative across borders or traveling to a country with a different currency, you will be able to transact seamlessly. And PayPal World is purpose-built for the future of commerce too. The platform will be compatible with dynamic payment buttons, stablecoins, and the latest technologies and commerce experiences, including agentic shopping. PayPal World is expected to go live beginning in the fall, with partner wallets connecting to PayPal and Venmo. Over time, PayPal World aims to connect billions of users at scale, and we expect this to expand as we add more partners in the coming months and years. Even since our announcement last week, we've received multiple inbound requests from wallets across the globe looking to join the PayPal World platform. Moving to our PSP business, I want to reflect on one of my first earnings calls, where we shared our plan to reset our largest merchant relationships to price our services to the value we deliver. The consequence of that reset was pressure on growth in exchange for long-term profitability. Now we are on the other side of that and can confidently say that our strategy worked. We maintained our customers, and we are having more strategic conversations and relationships with them. And most importantly, we are now growing our Braintree TPV again and expect an acceleration in the back half of the year. This is an important inflection point, and I am really proud of the team for their execution. Key to this strategy has been investing in and scaling our strong suite of value-added services. These services are helping position PayPal as a trusted, innovative partner in this evolving commerce landscape and have transformed the margin profile of our PSP business. Let me share one example. Payouts is one of the value-added services that is growing rapidly. Some of the world's top travel, mobility, and social commerce platforms already use Hyperwallet to manage and distribute funds to hosts, drivers, and creators globally. Most recently, our payouts capabilities were a strategic enabler in our landmark partnerships with the Big 12 and Big 10 college athletic conferences that I mentioned earlier. Hyperwallet enables the conferences to provide student athletes with rapid access to revenue share payments that can be sent directly to their PayPal or Venmo accounts, where they can then spend and send the money instantly. For small businesses, our priority remains empowering merchants with the tools they need to manage and accelerate their growth. We're steadily migrating more transactions onto PayPal Complete Payments. PPCP enables SMBs to easily access our latest online branded checkout and new products like Fastlane. As of today, over half of SMB volume flows through this platform, a notable improvement since last quarter. Our recent expansion of PPCP into Singapore further extends our global reach. We also continue to deepen our relationships with the most popular platforms where SMBs manage and grow their businesses. Just last week, we announced an expanded partnership with Wix that gives merchants access to our full suite of payment tools, seamlessly integrates into Wix payments to fuel sales growth. When our small business customers succeed, their relationship with PayPal deepens, and we remain committed to expanding access to the tools and capital that fuel that growth. Let's turn to how we're shaping the future of commerce by innovating in agentic, ads, and stablecoins. In each of these areas, we are creating new ways to fuel growth in the years ahead. Agentic AI is rapidly changing the commerce landscape, and PayPal is at the forefront. We were an early mover, launching the first remote MCP servers for commerce earlier this year. Now we're helping merchants and developers meet the moment as consumers begin to purchase goods and services through AI agents. As you've seen through our announcements over the last few months, the major players in AI, including Perplexity, Anthropic, and Salesforce, are working with PayPal to create powerful new agentic commerce experiences. These new experiences will enable customers to find the right products, check out directly within the AI client, track purchases, and much more. We have differentiated KYC and KYB expertise, access to the largest ecosystem of payment-ready wallets with PayPal World, and will continue to build our capabilities in this nascent space so that we strengthen our position as the go-to partner for agentic commerce. We have the brand trust, data, and expansive customer base to make this vision a reality. Moving to ads, We continue to make strides with new products that create more personalized shopping experiences by allowing merchants to reach the right customers more effectively. We launched off-site ads in Q2, enabling brands to reach millions of consumers across the open web through display and video ads, all powered by PayPal's data insights. Building on this, we introduced storefront ads, a new ad format that allows consumers to browse, shop, and pay directly within the ad unit. What makes storefront ads truly differentiated is our ability to combine seamless in-ad checkout with direct merchant integration and PayPal's trusted payment capabilities. Following our US launch, we've begun expanding internationally, with PayPal ads now live in Germany and the UK, and we continue to scale our advertising business globally. Turning to crypto, I want to highlight our stablecoin, PYUSD, which is a pivotal part of our mission to advance global commerce by directly addressing pain points our customers face today, namely the burdens of high fees and the slow speed of cross-border money transfers. Traditional payment methods can be prohibitively expensive and time-consuming, creating friction that stifles growth and opportunity in global trade. PYUSD delivers a stable, reliable, and cost-effective alternative to conventional systems. We can enable businesses and individuals to transact with greater confidence and agility, fueling economic activity on a global scale. We are laser-focused on solving real-world problems for our customers and sequencing our efforts, starting with cross-border transactions. With the strength of PayPal's commerce network, PYUSD is well-positioned for mainstream consumer and merchant use cases. This quarter, we added the ability to earn rewards for our stablecoin on PayPal and Venmo, and announced the expanded availability of PYUSD on Stellar and Arbitrum blockchains. We are collaborating across the ecosystem to expand PYUSD's prominence as a commerce-first stablecoin with a network of exchanges, custodians, and other payments partners, including Coinbase, Fiserv, and MasterCard. As I mentioned earlier, PYUSD will also be a major enabler of the PayPal World platform. Yesterday, we announced Pay with Crypto, powered by PayPal, which will enable instant crypto to stablecoin or fiat conversion. It will support transactions across more than 100 cryptocurrencies and wallets, such as Coinbase and MetaMask, and tap into a global base of more than 650 million crypto users. We're only at the beginning of what's possible here. I'm excited to see us continue to solve critical customer issues related to cost, speed, stability, and seamless payment integration. A big part of the future of commerce will be on-chain, and PYUSD will help power that journey. As you can tell, our pace of innovation has accelerated significantly. This is in large part due to our efforts to consolidate our platforms, strengthen our infrastructure, and leverage AI across the company. To wrap up, there is tangible momentum across the business. We are growing transaction margin dollars at a high single-digit rate, and we continue to see impressive growth across PayPal, Venmo, and our PSP business. At the same time, we're making big and bold bets for our customers in AI, ads, and crypto. I'm proud of our team for leading the industry forward. With that, let me turn it over to Jamie.
Thanks, Alex. Moving to slide 10, PayPal delivered another quarter of profitable growth. Transaction margin dollars grew 8%, excluding interest on customer balances. This was a continuation of last quarter's momentum and a meaningful improvement compared to the past 3 years. I'll walk through the key drivers and a few puts and takes momentarily. While we are pleased with our progress, what's even more exciting is the foundation we are building to sustain and accelerate this growth in the years ahead. TM dollars growth had multiple sources in the quarter, including strong credit performance, branded checkout flow-through, improvements in PSP profitability, and Venmo. We drove operating leverage through a combination of top-line growth and cost discipline as we remixed less productive spend into product, tech, and marketing. Taken together, non-GAAP operating income grew 13%. Share buyback and a favorable tax rate more than offset headwinds from lower interest rates, contributing to 18% growth in non-GAAP earnings per share. Adjusted free cash flow which excludes the net timing impact between originating and selling European buy now, pay later receivables, was $656 million. Adjusted free cash flow was negatively impacted by timing shifts in working capital, which we expect to reverse in the second half of the year. We continue to expect full-year free cash flow of $6 to $7 billion. Turning to slide 11, account and engagement trends are healthy. Active accounts and transactions per account, excluding PSP, both continue to grow. Total active accounts increased by nearly 2 million from the first quarter to 438 million. Monthly active accounts also continued to show steady progress, up 2% year over year to 226 million. Transactions per active account, excluding PSP processing, grew 4%. Moving to slide 12, total payment volume grew 6% at spot and 5% on a currency-neutral basis to nearly $444 billion. Looking across the product portfolio, there are a few key areas I'd like to highlight. As Alex noted, we are driving faster growth at Venmo. Venmo TPV increased 12%, its highest rate of growth in 3 years. In addition to driving more awareness and usage of commerce capabilities, we have been focused on improving core product and user experiences, which contributed to a P2P acceleration in the quarter. Branded experiences TPV, which includes online checkout, PayPal and Venmo debit, as well as Tap to Pay, posted another quarter of 8% growth. While debit and Tap to Pay spend represent a smaller amount of volume in branded experiences today, they are growing rapidly and are up more than 60% year over year. Winning checkout remains our most critical priority. Our teams are laser-focused on advancing the many initiatives that reinforce our checkout business. In the second quarter, online branded checkout volumes grew 5% on a currency-neutral basis. This was relatively consistent with the growth we delivered over the past few years. At the same time, the macro and consumer spending environment has been uneven. As we moved through the quarter, we observed a slight softening in retail spending in the U.S., most apparent in areas likely impacted by tariffs, such as Asia-based marketplaces with higher exposure to goods sourced from China. We continue to make progress modernizing and improving the performance of our checkout experiences and scaling more seamless authentication like passkeys and biometrics. We are also increasingly giving consumers more reasons to choose PayPal, for example, with enhanced rewards and incentive programs. Pay with Venmo and Buy Now, Pay Later continue to outpace the market, taking share from other payment methods. Our efforts to drive branded experience adoption with our debit cards online and in-store, including Tap to Pay, help to fuel our checkout business by increasing brand habituation, leading to incremental branded checkout volume. We are confident in the steps we are taking to drive higher conversion, selection rate, and engagement, and are now beginning to take these enhancements outside of the U.S. While still early in our progress, we see clear signs that our initiatives are making a positive impact. Bending the growth curve takes time for a company of our scale, but we remain confident that the actions we are taking today position us well to accelerate over time. Turning to PSP, which spans both large enterprise and SMB processing, as well as parts of our vast portfolio like payouts, invoicing, and point-of-sale solutions, volume grew 2% in line with the first quarter. Our focus on prioritizing healthy, quality growth within our Braintree business continues to deliver meaningful TM dollars improvement. We've also hit a positive inflection point for Braintree volume. We are now past the peak pressure from renegotiating and shedding unprofitable volume. Braintree volume was roughly flat in the quarter. We expect a return to volume growth in the third quarter as we drive profitable front book business, support our existing merchant base, and continue to lean more into value-added services. Moving to more financial detail on slide 13, transaction revenue accelerated to 4% growth on a spot and currency-neutral basis to $7.4 billion. Excluding Braintree, transaction revenue grew 7% on a currency-neutral basis, accelerating from 4% in the first quarter. Other value-added services revenue grew 16% to $847 million, driven primarily by strong performance in consumer and merchant credit. We ended the quarter with $6.9 billion in net loan receivables, up 7% sequentially, and we continue to be pleased with the quality, diversification, and performance of our credit portfolio. Most of this growth came from our Buy Now, Pay Later and international consumer revolve portfolios, where we have seen improvement in charge-offs and low, stable delinquency rates. We are focused on targeting a balance sheet light model for credit and are making progress towards externalizing another part of our portfolio later this year. Transaction take rate declined by 4 basis points to 1.68%, driven largely by the impact of foreign exchange hedges, product, and merchant mix. This decline was an improvement relative to last quarter and included slightly less impact from Braintree and payouts. Online branded checkout take rates were more stable year over year, reflecting our mix of transactions, merchants, and a continued focus on profitable growth. This focus and the progress we are making across our strategic growth drivers continues to be most clearly demonstrated by the acceleration in the TM dollars growth we have delivered over the past year. As I mentioned earlier, TM dollars ex-interest grew 8%. Growth came from multiple sources, including credit, branded checkout, PSP, and value-added services, and Venmo. TM dollars also benefited from a roughly 1.5-point one-time contribution from the renewal and expansion of our relationship with a key payment partner. This benefit was more than offset by an increase in transaction losses in the quarter. Higher transaction losses were a combination of normalization in loss rates following last year's strong performance and new product introductions. Non-transaction-related OpEx increased 2% as we continue to actively manage our cost structure while reinvesting in key growth initiatives. Compared to our guidance, OpEx benefited from the timing of certain G&A items and the shift of some marketing spend into the third quarter. Non-GAAP operating income grew 13% in the quarter to more than $1.6 billion. Non-GAAP operating margin increased about 130 basis points to nearly 20%. You'll also see in our materials that we reported restructuring costs of approximately $92 million. These costs are related to workforce actions and the key tech transformation initiatives that we discussed at our Investor Day. On the tech side, this includes the start of a 3-year plan to re-engineer infrastructure, streamline operations, and exit certain data centers as we unify platforms and migrate more to cloud-based solutions. We're excited about the increased speed, flexibility, data utilization, and scalability that these efforts will deliver over time. Moving to capital allocation, in the quarter, we completed $1.5 billion in share repurchases, bringing share repurchases over the past 4 quarters to $6 billion. Finally, we ended the quarter with $13.7 billion in cash equivalents, and investments, and $11.5 billion in debt. Moving to guidance on slide 14 for the third quarter and full year 2025, following a strong first half, we are on pace to outperform our original expectations for the year. We are raising our full year guidance for both TM dollars and non-GAAP EPS. Similar to last quarter, we have embedded a range of potential outcomes into the second half of the year. The low end of our full year guide could absorb up to a couple of points of deceleration in e-commerce spending should that occur. Overall, consumer spending and the labor market have proven resilient, but we continue to closely watch how tariffs and other trading friction might impact global economic activity, spending, and supply chains over time. For the third quarter, we expect currency-neutral revenue growth at the lower end of mid-single digits, or approximately 4% or so. We expect continued momentum in transaction revenue with lower growth in other value-added services revenue compared to the second quarter. This includes the impact of interest rate headwinds and a more difficult prior year comparison for credit growth. We expect third quarter TM dollars to be between $3.76 and $3.82 billion, which represents 4% growth at the midpoint. Excluding interest on customer balances, we expect TM dollars to increase by approximately 6% at the midpoint. We are planning for up to high single-digit non-transaction OpEx growth in the quarter. This higher growth reflects continued investment in tech and new product launches, as well as the shift in timing of some marketing spend that I referenced earlier. We expect to deliver non-GAAP earnings per share in the range of $1.18 to $1.22, or roughly in line with the prior year at the midpoint. For the full year, we now expect TM dollars to be between $15.35 and $15.5 billion, which represents 5 to 6% growth. Excluding interest on customer balances, we now expect transaction margin dollars to grow between 6 to 7%. We expect to deliver full-year non-GAAP earnings per share in the range of $5.15 to $5.30, up 11 to 14%. Our guidance continues to project approximately $6 billion in share buyback and full-year free cash flow of approximately $6 to $7 billion. I'd like to wrap up by thanking the PayPal team for their continued focus and dedication. The progress we're making gives us a strong foundation to build on as we execute on the second year of PayPal's transformation. With that, back to you, Alex.
Thanks, Jamie. We had a great second quarter and are confident that our strategy is working as our momentum builds. We are executing on everything we said we would do 12 to 18 months ago. We are building out and improving our branded experiences and giving consumers many more reasons to choose PayPal and Venmo. We are capitalizing on untapped opportunities in PSP and SMB. At the same time, we are actively shaping the future of commerce through our work in AI, ads, and crypto. And our velocity of innovation is only accelerating. I am more excited than ever about the future we're building. Steve, let's go to Q&A.
Before we open the line, I'd ask everyone in the queue to consider your fellow analysts and ask just one question so we can get to as many people as possible. Regina, please open the line.
At this time, I would like to remind everyone, in order to ask a question, press star, then the number 1 on your telephone keypad. We'll pause for just a moment to compile the Q&A roster. Our first question will come from the line of Ramsey El-Assal with Barclays. Please go ahead.
Hi, thanks for taking my question, and great to see your strategic plan really gaining momentum this quarter. I wanted to ask about branded online checkout TPV, which decelerated just a bit quarter over quarter to remain pretty stable for a few quarters. Sounds like tariffs are offsetting some of your own efforts like modern checkout and Will Ferrell to accelerate, branded online TPV growth. How meaningful was the tariff headwind on branded online checkout TPV in Q2? And in July, are you seeing a stable tariff-related headwind there, or is that a metric, on that same metric, or could we see the headwind, change and potentially intensify?
Hey, Ramsey, thank you for the question and appreciate the comments on branded checkout. Look, we're excited as well. I think, our execution on, the global rollout, the U.S. rollout is exactly what we were looking for. And really the cohorts that we now have live in market are delivering exactly the way we expected. To the comment on these platforms from Asia, the way we think about it is, without that pressure, our branded checkout, really would have been at 6%. And so, it's a small amount, but we've started to see it stabilize a little bit as we get into this month. Jamie, anything you'd add?
Yeah, no, I would just say that, our trends underlying all this really have been broadly consistent. There's puts and takes in any given quarter. And like Alex said, we did see a slight deceleration really in those Chinese to U.S. corridors. In July, I would say it's still early, but seeing a bit less pressure in that space. We plan the full year with branded checkout at mid-single digits. We are on track for that. And the watch out that I really am looking at is, we still have a fair amount of policy and macro uncertainty. So we're obviously monitoring that, but we're very focused on our execution around our strategic initiatives. And, bending the curve takes time, and we expect to accelerate as we move through the next couple of quarters and next couple of years.
Our next question comes from the line of Tien-Tsin Huang with JP Morgan. Please go ahead.
Hey, thanks a lot. I want to ask about all the initiatives, Alex, that you went through up front. There's a lot going on, a lot to study. I specifically want to ask on Pay with Crypto and PayPal World. Because when you think about this, I can make the case that both are TAM expanding, but potentially at a lower take rate. We've been getting a lot of these questions on both sides. So how do you see it? And are you confident that both will be revenue and profit accretive as you push towards, I think you call it interoperability quite a bit in some of the releases? Thanks.
Yeah. Thanks, Tien-Tsin. So yeah, we're very excited, and you can, hopefully you're seeing the pace of our innovation just continue to accelerate, and sort of you're starting to see our whole strategy and the system that we're building together, really play out. Let me take each of those. So PayPal World, I think the easiest way to think about it in the short term is, what I'm really excited about is the interoperability between PayPal and Venmo. So now you've got, a huge amount of Venmo customers that, can click on the PayPal branded checkout and make their purchase online. Then we've opened it up to, almost 2 billion additional users, and that will just continue to grow. And the best way to think about it is that's branded checkout. And the way that we've orchestrated the agreements on PayPal World as a platform is, the merchants maintain their branded checkout economics. And so, if you're a user, and I've gotten a lot of, really fun notes in from LinkedIn UPI users that are now thrilled to be able to click on the PayPal button anywhere in the world and be able to make a checkout. And for us, that's just expansion of TAM at the existing economics that we have. And then on top of that, you've got P2P economics and all sorts of other things that will play out over time. So that's on PayPal World. It really is an expansion of the TAM. On Pay with Crypto, we really do see this as, again, expansion of TAM at pretty attractive economics. The expenses come down significantly with crypto. This is still early days in consumers really using crypto to pay, but we want to make sure that our merchants are enabled and have the ability to take the payment when they need to. So if you look at the net take rate on Pay with Crypto, it's actually quite attractive. And we'll see how it ramps up over time from a volume perspective. But again, to your question, both are expansion of TAM for us.
Our next question comes from the line of Timothy Chiodo with UBS. Please go ahead.
Great. Thank you for the question, taking the question. I want to talk a little bit about a topic that's becoming more important to investors, which is the promises of prominent placement of the branded checkout button in your merchant negotiations. So when sitting down with merchants and renegotiating contracts, whether it's Braintree or PayPal or other, you're looking at the relationship holistically across products, the take rates or pricing, the use of BNPL, and the list goes on. But maybe most importantly, there's that potential contractual agreement or kind of a promise of a prominent placement of the branded checkout button. And I was hoping you could give a little bit more context on how those conversations work and how things may or may not be changing on that particular aspect of the renegotiations. Thanks a lot.
Yeah, Tim, thanks for the question. So let me paint the picture. So, what's exciting is, when we sit down with these merchants, and I'll sit down with the CEO as an example, we're really working merchant back about what's most important to them. And a lot of the time it starts with their ability to get access to more customers, and then obviously conversion matters. But how do they find the right customer? How do they make sure that they're bringing the right customer to their site? And so now we have a full suite of offerings, and it can go from ads to some of our commerce APIs to drive personalization, and it really runs the gamut. And so the conversations start with, hey, what are you trying to solve? We've got obviously unbranded, we've got buy now, pay later, we've got branded opportunities in PayPal, in Venmo. What demographic do you want? What are some of the value-added services that you want? So we really run the end-to-end spectrum. I think what's a couple of things that I would highlight that are exciting and sort of changing when it comes to branded in particular. First, because we are really pushing on buy now, pay later right now, we're pushing on our new branded experiences that brings everything together. We really can be that one-stop shop for a merchant to be able to have one button, a very powerful button that brings them the right demographic and the right services for their customers. The second that I'd highlight is we're really changing the game from what has occurred in the past, which is with our Payment Ready API, we're now able to really identify who that customer is upfront. So instead of having to negotiate, hey, we need presentment at this number of buttons or this type of thing in certain areas, what we're really spending time talking about is, hey, accept our API, ping our API first, and we're going to tell you exactly what this customer wants. And so that is driving increase in conversion, increase in merchant adoption, because we really get to personalize the experience for the customer. So I think we're leaning into the future, and I'm really excited about not having to create sort of the 15 different buttons on a checkout, but just being able to give a merchant the ability to ping our payment API and serve the consumer exactly what they want to be able to increase conversion.
Our next question comes from the line of Darrin Peller with Wolfe Research. Please go ahead.
Thanks, guys. Can we touch on how the European rollout of the modern checkout initiatives are coming along now? Just what's the timeline on it? When do you anticipate seeing measurable results? And then just overall looking at branded, maybe a little more color on international growth versus US, and just revisiting whether you still expect to exit the year at an accelerated rate for branded versus the beginning of the year. Thanks a lot, guys.
Yeah, thanks, Darren. So again, just to highlight, we were very deliberate in our strategy to start our rollout of our new branded experiences in the U.S. We're up over 60% now in the U.S. And again, the cohorts that we've rolled out are continuing to operate in the way that we wanted and showing the uplift that we expected, we talked about in the past. We've now started to roll that out in the UK and Germany. As I've mentioned previously, those integrations typically are on newer integrations throughout Europe. And so I actually think we're going to continue to accelerate our adoption over the coming quarters across Europe. So very, very excited there. We're mid-teens overall on global TPV, and we want to see that continue to increase over the next few quarters.
Yeah, I can jump in here and talk about non-US growth, which I think, Darren, is where you were taking the second part of this. If you look at outside the US, again, we're really seeing largely consistent trends here. We continue to take share in Europe, including Germany. And as Alex mentioned, our broad push around our latest innovation, it's not just the latest experience, but it is buy now, pay later. It is the new app and app upgrades and the experience around that. It's NFC, which we had a really successful rollout in the second quarter in Germany around that. So it's all around branded checkout, really driving the habituation and the resulting halo that comes with that. And the teams are really focused on scaling that and pushing that as they go through. With respect to, accelerated rate, what I would tell you is that, we are laser focused on branded checkout. And I think, as we talk about all of this, that focus on execution, the focus on the strategic initiatives, we fully expect to see an accelerated rate of growth over the next few quarters and the next few years.
Our next question comes from the line of James Faucette with Morgan Stanley. Please go ahead.
Hi, good morning. Thanks for all the details here today. I wanted to touch on your efforts to expand the brands to offline and some of the initiatives that you have, including debit, expansion of BNPL and credit. How should we think about that roadmap on a go-forward basis? It seems like you're driving really good engagement, but just wondering about expansion into other geographies and then product expansion beyond. And it seems like there's an opportunity to become kind of a full suite of financial services that you're pursuing, but I'd just like to get the mileposts we should be tracking on those initiatives. Thanks a lot.
Yeah, thank you, James. So, I think you're hitting on what we've really been laying out in our strategy when it comes to branded experiences. And the best way to think about it is we just want to meet our customers where they are. The more they think about it, they are not delineating between online, offline, agentic commerce. They just think about buying. And the way they see product placement, the way they're buying potentially online and picking up in store, like customers are just choosing commerce the way they want to choose it. And PayPal aims to be that choice for them wherever they want to buy. And so you've seen us, obviously continue to accelerate our branded checkout experiences we just talked about online, but really leaning into that omni-channel strategy. And in less than a year, I'm really proud of the team. We're at 5 million new PayPal debit card users since our launch. TPV growth for PayPal debit card up 75% in Q2 with really good economics. And then that creates the habituated flywheel where, for those debit card users, we see 6x transaction activity, 3x increase in average revenue per account for these debit card users. Then you look at the strategy that we just rolled out in Germany. And so, again, as a reminder, this is, our first real end-to-end wallet that includes not just obviously online checkout, but NFC tap to pay, a reward system, buy now, pay later built into offline purchasing, and really seeing exciting growth there. So 3 million NFC enrollments since launch, with engaged users that are transacting 16x per month. That is showing that we can resonate in an online, in an offline world, and really enable customers to use us for every purchase, every time, everywhere. And so that is the strategy. I think you're going to see us continue to roll that out globally. We said next up is the UK, but we have great brand prominence across Europe, and believe we can take this platform across the rest of our market. So continue to see that roll out. And again, it's a full system of online, offline, BNPL, and all of this coming together.
Our next question comes from the line of Harshita Rawat with Bernstein. Please go ahead.
Hi, good morning. I want to follow up on PayPal World and important announcement. Now, historically, we have seen challenges with regards to user experience, awareness, different priorities when it comes to interoperability across wallets. And I know, in the past, it was kind of hard to create interoperability between PayPal and Venmo. So Alex, I think my question to you is, what could be different this time as you try and scale this to across PayPal and Venmo and also international payment systems? Thank you.
Yeah, thanks, Harshita. Look, I think we've created a platform that really simplifies the user experience. So, and it created a framework for all of the different wallets to be able to come together. So let me just talk about what we're in control of, obviously, which is that PayPal experience. So for an online checkout, whether it's a Venmo user, whether it's a UPI user, whether it's a Mercado Pago user or a WeChat user, you will be able to go to any PayPal button that you see on any merchant anywhere in the world, click that button, and be able to check out with your native wallet. So we want no integration required by the merchant. The merchant already has PayPal integrated. They are accepted into the PayPal World ecosystem and now have access to billions of consumers. No change from the consumer. They just have to click on the PayPal button, and they'll see if we can identify them through their phone number. We'll actually at some point change the button to be their home button so they can see it. If not, we'll be able to have them using some of the technology that we've already been building, things like Fastlane, things like being able to identify users up front, be able to auto create that experience so that it looks like a home experience for that native wallet. So again, I think we've really focused, and this was a big conversation that I had personally with the CEOs of these other wallets, is this has to feel native. This has to feel like it's a common experience. There will be go-to-market commitments from all the different wallets to train users and show them that the PayPal World experience is right for them. But this is going to be frictionless. Then if you look at the offline experience as well, which we probably don't spend enough time thinking about, it's going to be the same thing. So if you take a Venmo wallet or a PayPal wallet and you travel to India or you travel to China and you see a QR code, a UPI QR code from a local merchant in India, you can actually pull out your Venmo wallet, scan the local QR code, and make a purchase. We want it to be that frictionless. You're not adding new modules in your app. You're not doing anything different. You're just scanning QR codes and being able to purchase with your home wallet, and the currency conversion works. So we are committed to making this as frictionless as possible for the merchant and the consumer. And that's why we worked so hard to bring these wallets together. And I'll just say, just to wrap up, I am really excited about the partnerships and the conversations we've had with these wallets. It is, there's a reason there isn't an interoperable network of wallets in the world. It's hard. But we've had CEO to CEO conversations and a commitment across the different wallets to ensure that we're going to solve for a single platform for the world that enables consumers to be able to really have a delightful experience. So more to come on this, but obviously a heck of a good start and lots of momentum building.
Our next question comes from the line of Sanjay Sakhrani with KBW. Please go ahead.
Thank you. Good morning. Alex, Jamie, I appreciate the comments on a couple of points of e-com deceleration factored into the low end of guidance. I guess as we dig into the key drivers of growth and transaction margin dollar growth in the second half, can we unpack that a little bit? Like how much visibility do you have into the new initiatives and sort of the specific growth drivers? And just maybe a quick related question on transaction losses, which ticked up. Is this the new run rate? How should we think about that on a go-forward basis? Thank you.
Good morning, Sanjay. Excuse me. With respect to transaction margin, what we're really seeing this year, and I would say are durable, consistent drivers between branded checkout, TSP and VAS, Venmo, and credit. We saw credit as a strong driver in the first half. When you get into the second half, those drivers really continue very consistently. There is a couple of dynamics I would maybe call out. One is that in the second half, we expect about a 2-point interest rate headwind in third quarter and in fourth quarter, about $125 million. Just as you get into the second half, we had rate cuts in the last half of last year. We're expecting a couple of rate cuts in the second half of this year. So that we expect a decel, which will impact transaction margin dollars. The other thing is we expect slightly less contribution from credit, just with tougher comps in the second half of last year. So that is the TM dollars piece of it. The other part, TL. With respect to transaction loss, we saw an uptick in transaction loss this quarter. It was about 9 bips. And I'd say there's two things that are happening here. Number one, and we talked about this, I think, when we have given our guidance at a couple of points earlier this year. Number one is normalization in transaction loss rates after what was a strong year last year. And second was as we've been implementing and launching new products, we're just seeing a little bit of an uptick there and, things we have to work out and put more rules around and get those back into the flow. We expect the full year run rate to be about 8 bips, so up from last year, but not as high as the second quarter. And, the other thing I would just mention is some of these other products that we've been launching and scaling just come with naturally higher loss rates, things like debit. So all of this, it's an important area. We continue to be very focused on optimizing through AI, through the team, and through automation. But that's really how we're thinking about TL.
Our next question comes from the line of Colin Sebastian with Baird. Please go ahead.
Thanks and good morning. Maybe just quickly would be curious, any update on Fastlane in terms of the rollout and adoption there, and if you're able to measure any uplift in volumes from that so far. Thank you.
About time.
Yeah, thanks, Colin. Quick update on Fastlane. We continue to roll it out. Our focus is on the largest merchants, which again is excitement and adoption is strong. It takes time for us to move through. They've not really invested in their guest checkout. But the improvement for these merchants is continuing to hold and be very strong. So, we're seeing conversion uplift of 50%. And consumers continuing to opt in. I think again I would highlight as we continue to roll it out, 75% of users that are coming into Fastlane are really new or were dormant PayPal users that are now coming back in. So the strategy is strong for us. The biggest next inflection will be as we roll out multi-processor, because many of our largest merchants really need Adyen, as an example, to be able to support Fastlane, which they've committed to do. So that'll come out in the next couple of quarters. And then, this is a long game, and we're excited about the momentum, but just continuing to move along.
Our next question will come from the line of Trevor Williams with Jefferies. Please go ahead.
Great. Thanks a lot. I just wanted to ask on the news over the past few weeks with certain banks starting to charge for access to consumer data. Just anything you can share on where within the business you rely on aggregators, and with what you know today on the pricing that's been floated, just how you guys are thinking about the potential impact. Thanks.
Yeah, Trevor, thank you. I'll keep this one simple. We're big supporters of open banking, and we've looked at this end-to-end throughout the business, and the changes are just immaterial to us. We're not going to be impacted by this really at all.
Regina, let's make time for one more question, please.
Our final question will come from the line of Dan Dolev with Mizuho Securities. Please go ahead.
Hey, guys. Thanks for squeezing me in quickly. So can we talk about any benefits you're getting from the upgraded checkout experience? Obviously, there should be an uplift in the second half. Is there any way to quantify that? That would be great. Thank you.
Yeah, Dan, what I'd say is from the cohorts that we've rolled this out to, and remember, this is 15% of global TPV, we're continuing to see the uplift that we've talked about. Call it a point of uplift. So that is going to continue. We just need to roll this out to more. And so, our expectation is if you look at branded checkout overall, it's this new branded experiences. It's the momentum that we've got in buy now, pay later, which we're seeing, over 20% year-over-year growth. It's the improvement in Pay with Venmo, which we're seeing 45% year-over-year growth. All of those coming together, we continue to see momentum on. And so as we exit this year, I expect that we're going to start to see real improvement in branded checkout overall, and then as we move into 26. So, this is a big shift. It takes time to move. I'm excited about the momentum we have across all three of those elements, the new experiences, buy now, pay later, and Pay with Venmo. And I think we're going to start to see this thing turn as we get through the next few quarters and into 26.
Thanks. Alex, any final thoughts before we wrap?
Again, thank you for the questions today. I'm very proud of the quarter the team delivered. We did not get any questions on Venmo, and I want to highlight that we usually get a lot of questions on Venmo, and the team is just really killing it. And so there's something magical happening with Venmo right now, and I'm excited about where we're heading there as well. So overall, appreciate the team's urgency and innovation. We're executing well, and excited to update you all along the way. So thank you, everyone. Take care.
All right. I mean, he was correct there at the end. When he said no questions about Venmo, because I'm pretty sure he's always very excited to talk about Venmo.
Yeah, even when Venmo wasn't doing particularly well, like he's been passionate about Venmo from a user standpoint and also from what they're doing. And that segment is helping PayPal during this transition time when they're doing this shift with Braintree really actually do pretty well. You wouldn't know it from the stock price action, but yeah, Venmo, like the nice thing is like these headwinds really begin to shift next quarter and really through next year. If you want to pull up this, just early stock price action. So it's, the UNH reported down about 5%. I know a lot of you guys are into or in Novo. I'm rooting against them personally, but yeah, they're down 21%. PayPal, down 4%. Really good earnings. Sofi honestly should be up more than 10%. Ridiculously strong earnings, just ridiculously. So, but I mean, like these sort of things happen, and it can take some time to digest some of the numbers. I didn't like everything in the earnings call, but it was a good, solid call, strong call. What did you think overall in the results and the call itself?
I mean, I always have an issue with earnings call at the start, when it's all scripted. I mean, we can all
Yeah,
read it. So what's the point? Like, I
yeah,
rather they spent way less time with the script and way more time answering questions and maybe just talking about aspects that they want to talk about. Like, Alex Chris could have just not read the script and talked about Venmo, what he's excited about, answered maybe more questions, right? Because if you talk about exciting things, then maybe analysts will start asking questions about that one, right? It took a while until we actually got that fast lane question. I mean, it was what the third last to last question or so from the earnings call was a bit of a shame, but I guess again that's what the earnings calls are most of the time, unfortunately. Other than that, I mean, luckily we have Alex Chris talking on Thursday, 11 a.m. Eastern, so on X. So I guess he's going to talk about all the exciting stuff that he wants to talk about, AI, SMB, and all of that. So we don't have to wait that much longer for him to reappear yet again. He's probably also maybe going to appear on TV later today, the usual stuff.
yeah.
But yeah, it seems like they're very excited. It seems like, I mean, they don't sound that excited, but it seems like they are excited, especially towards the back half. I mean, towards the end of this year, going into 2026, because that's when you will see all of the impacts. That's when all of the big changes. We're talking here about trillions of dollars in volume, for a company like PayPal. It's not a small startup that generates a couple of hundreds of millions, maybe $1 billion, something like that. There's quite a lot of money flowing into the PayPal ecosystem, and so when all of that turns around, I think it's a big turnaround. Fortunately, we'll have to wait, right? PayPal is not a stock where you should expect it to 2x, 3x like a lot of stocks have done in the last couple of weeks and months. But I think we both agree that reaching all-time highs, maybe even surpassing it over the next 5 years or so, is definitely a possibility. I mean, fewer shares, stronger company. I don't see why that's not going to be possible.
Yeah. The free cash flow is there. Bottom line numbers have been very good across the board. They've been fixing their technology stack, rolling out a lot of new initiatives, some which will short term drive revenue, and some which are longer term, like Fastlane that they mentioned. But yeah, it's it's a slow burn. I still think that they'll hit an all time high by 2030, but it's actually happening kind of like I expected, where figured, hey, we might be range bound or underperform, really even through that until that quarter 4 report, which will be in January. But you never know with these sort of things. Like opportunity costs, certainly up to this point. At some point in the future, I think that changes. And so there's a couple of interesting mentions there that stood out to me. One was it was the quickest analyst question. We saw a headline which caused a big dip in PayPal
Mm-hmm.
and a lot of other companies, were JP Morgan Chase, because of CFPB 1033 being vacated, which basically it's an open banking rule and open banking law that requires banking institutions to get free access to the data by consumers, and also those products that we as consumers say, hey, I'd like to have Robinhood, or I'd like to have Sofi, I'd like to have PayPal have access to my bank as well. Banks have had to provide that. They couldn't charge fees. That rule is being vacated, so they can be charged. And so PayPal just got destroyed that day when JP Morgan Chase said that they're looking and considering doing this. And Alex Chris's response was, yeah, no real impact on us. Doesn't do anything for us. Doesn't hurt us at all. We're fine. And that's, it took analysts a little while to understand that. None of the stock didn't rebound immediately from that. It should have when that came out, or even when this mention was there. But that can happen, and it can take a little while just for that to correct. But the other thing that really stood out to me that was very interesting was, it sounds like that there's going to be another deal like KKR. Specifically, Jamie Miller mentioned in the context of buy now, pay later, that they were trying to reduce, I don't remember the exact wording, but the capital requirements needed for accelerating buy now, pay later growth, removing some of that. So in essence, what happened with KKR, if you guys aren't familiar, I know that you are, Neil, they buy now, pay later is 4.99% take rate for for PayPal. They actually increase that because everybody else is charging ridiculous amounts. They're like, we can get at least 5%. So it's their largest take. And their goal with buy now, pay later was really to accelerate branded. It's not to like make the interest rate and everything. So they're happy to sell those loans to, for instance, in Europe, to KKR. And that way, if the consumers actually soften, if macro changes and everything, they're not exposed and at risk to default or anything like that. So I thought that was pretty interesting and actually surprising too. Not shocking, but that may be one of those free cash flow drivers as well in the second half of the year. So any thoughts on either of those, Neil?
No, I mean, it makes sense. I mean, even the first deal made sense with free cash flow. Did you hear any? I mean, other than what we read from the report, did they say anything else that I've missed in the earnings call regarding the lumpiness in free cash flow? I don't think so, right? Nothing that we
let me
are
look
not.
for it. I don't remember hearing anything. I'm probably going to reach out to Investor Connect there.
Yeah, but with
flow.
with buy now pay later, I guess accounting wise, it's also a bit different the way these deals are structured as well. So, I mean, for us, let's see.
The only thing they're actually mentioned twice, reiterating the free cash flow there, and then it just basically repeated what they said in the slide, which I'm not sure what that means. So I'll reach out. I'm kind of curious on that. So anything that I glean, I'll post it on X, and I'll link you to Neil. So, but yeah, since they reiterated in the slides and in the call actually twice, like, hey, free cash flow $6 to $7 billion. It's like, all right, that's fine.
Yeah, which means the next 2 quarters are going to be pretty good ones.
Yeah. Like the free cash flow, if you look at that, it's going to look ridiculous. But we need to be careful as investors to not read too much in like a soft free cash flow quarter this quarter. And also going forward, we can get excited about it. It's fine. But quarter 3, quarter 4, the free cash flow, especially quarter 4, it's probably going to be something like $3 billion in one quarter. That doesn't mean every single quarter they're going to get that. So we can't get too excited. Although if the market wants to get really excited about that, I'm good with that. That's fine. So, the other thing that was interesting too was, the Fastlane comment. So Fastlane, I think there was one single mention prior to the analyst question, and they basically said, hey, where are we at in that process? He reiterated 50% uplift in conversions, 75% new or dormant PayPal users, which is really good for the ecosystem, that it's a long game. Now, they mentioned something that was, it was the first time that I heard it, basically that they're waiting, that the next level of acceleration as it relates to Fastlane is when Adyen ends up actually launching Fastlane. It's one of those partnerships where Adyen, it's something that Adyen really can effectively do. Given the double side data of PayPal, it's a natural partnership, which usually they compete, but not always. And so when Adyen rolls that out, it sounds like that's going to be accelerating adoption, just because a lot of companies are using an orchestration. So they're not just wanting to use Adyen or PayPal or Stripe or what have you. Instead, they have some sort of blend between all three. And so when Adyen rolls that out, that's going to be a meaningful driver there. Again, it's not monetized. It does add some total payment volume, but next year, they built into these contracts, he said in previous earnings calls, that they've built in the expectations as far as monetization in the future. But right now, they're focused on scaling. So that was a helpful update. And it's one of those things where, like, if the analyst hadn't asked that question, I'd be like, okay, Fastlane, like, does it not exist anymore?
Yeah,
like,
exactly.
What's going on? So, and one of the challenging things, though, is with a company this big and with so many things that they're doing, it's hard to, it's almost, I don't feel like they're throwing spaghetti on the wall to see what sticks, but instead there's a very clear, deliberate plan. You can see that with the launches that they've had over the last 2 weeks, PayPal World, Pay with Crypto. You can see a lot of those were fueled by the PayPal One initiative that they mentioned back in Investor Day, where they're resolving a lot of their silo issues, fixing their tech stack as well. So, I like the direction that they're going. It's a very solid, good earnings, actually a little bit better than I expected for the most part, other than that lumpy free cash flow. So, but yeah, it's the long game here with PayPal. Classic PayPal, though.
Yeah, no, I agree. I mean, it reminds me of when you remember, what was it? Almost a year. For a while, Sofi reports triple beat, stock is down.
Yeah.
I think we're having a bit of the same year. Of course, the growth rates are not the same. But what do you think about one of the first questions about growth in volume, PayPal World, crypto, how that's going to impact margins and all of that? How they're seeing
Yeah,
how they're
I
seeing
actually
that.
didn't like that answer at all from Alex Chris because he basically said, "Yeah, you're absolutely right. It increases our TAM." So okay, cool. But there was a question there about the take rate, and it sounds like
Yeah.
they're less certain on that. Now we do know because they announced it with Pay with Crypto that it's a
Mhm.
0.99% take or 1% take rate. It's actually comparable to what Circle and Coinbase announced as far as USDC Pay. So this feels like a reaction to that, just to make sure that people understand. Like, hey, it's actually a pretty interesting product because it's over 100 wallets and cryptocurrencies, so it's not small. And we actually found out that PayPal World is actually a lot of that is running on PayUSD payment
Yep.
rails, digital payment rails from yesterday's release, anyway. But yeah, as far as the take rate, that is a headwind. It sounds like it anyway to me. So it's overall, it's something that's necessary for PayPal. I don't think that this means that all that very lucrative cross border, which is about 10% of the income for PayPal, is going to shift immediately over to a much lower take rate. It's a process that takes time, but they have enough other growth drivers specific as it relates to margin and take rate as well. They'll be fine. But I wish they answered that more directly, or they said, well, we're evaluating, we'll see. One thing that they did say when they announced the Pay with Crypto is that this 1% is through next June, or maybe next July 2026. So it sounds like that they'll reevaluate that take rate. I wouldn't actually be surprised to see it climb a little bit. There are some challenges with direct payment through stablecoin that you can do wallet to wallet. Like if you and I are sending money to each other, like no problem. But the issue is PayPal does, and actually a lot of the other providers as well do a lot on the back end where they're making sure that this is a trusted user, that the money is actually there in the wallet or whatever system. They validate the card, they validate the transaction, and of course there's some risk too with settlement time. Not so much on the stablecoin thing, but so I expect that that'll probably go up. Maybe that's why they didn't answer, but yeah, not a great answer. I'll just call it as it is. If I see something I don't like, I say it. What do you think?
No, I agree. I mean, it was a good question. It was a good question that didn't get the answer. Got one part of the answer which we knew. Yeah, okay, of course it's expanding your TAM, but the actual question inside the question was about your take rate and how that's going to evolve. I understand that with their stable coins, with Pay with Crypto margin, you can play around with that, right? There are ways to get some good margins with that. But all in all, it does feel like when PayPal World was announced, it does feel like this is okay, expanding your total addressable market, but it does seem like take rate will probably come down. Margins are probably going to come down, which again, okay, if you can expand your TAM significantly, then I guess it's a good give and take, right? You take in more money, but okay, maybe at a lower margin, but at least you're getting maybe an extra $100 billion, hundreds of billions of dollars more that you wouldn't have gotten before, and that's how you make up the difference.
Yeah, and he did mention, it's significantly cheaper to do that on the crypto rails, on the payment rails.
Mhm.
So it's not just oh man, it's going from like a 4% take rate or whatever for international cross border to 1%. That's not the whole story. But I think it's easier or better to just look at PayPal as a whole in this case and understand that yes, there are some segments where it's like, okay, Pay with Crypto, they need to do this. It does help expand the TAM. But it is a headwind against margins, but there's a whole lot of tailwinds. Then overall, I think margins are going to continue to stabilize. They have stabilized. You've seen the inflection point with fixing the issue there with Braintree. You see that with tech stack stuff. You see that with monetization of Venmo. You see that with actually increasing the take rate on buy now, pay later. And as we see monetization really roll out, that's going to be meaningful. Yeah, advertising was the other area where they basically were silent on. I've got quarter pulled up, but let me see how many times they mentioned. I think it was
at the
twice,
start.
maybe?
Yeah, the start when they just went over the script.
Once. Yeah, just once. We continue to scale our advertising business globally. I understand, it's very early, and there's not. They just announced a lot of partnerships at Cannes. I always say it wrong in France, and it will take a little while for revenue to ramp. I do think that it begins to hit in quarter three, quarter four. I think it really meaningfully accelerates, but it's tough. Like there's so much that they're doing. You don't have like 5 hours to share it. So they kind of give the highlights, but I wish that they broke that out a little bit more.
Yeah, people need to remember this is an earnings call, not a investor meeting presentation, investor day type of thing. But again, Alex Chris to Thursday 11 a.m. ET is going to be live on X, where he'll probably share a lot more details on the exciting style of things. But yeah, I mean, there are even going back to the other question with the total addressable market expansion and then the take rate coming down. They have some levers to pull to make sure that eventually margins can stabilize, right? Advertising being one of them. Advertising is a business that didn't exist before, will probably generate a couple of billions of dollars in the future for them.
Yeah.
The stablecoin can definitely help them there as well to stabilize it all. They can earn interest on that, and so plus they control their own payment rails now. So there are definitely some levers to pull here to make sure that the TAM expands and the impact on take rate and margin isn't that drastic.
Yeah, and agentic commerce was mentioned a number of times too, and of course, Alex Chris will be talking about that in a day and a half. So it's a large push. PayPal is all over that. So that's one of the nice things about the company is they're not just waiting for others to innovate and then they're like, well, maybe we'll do that too. They're actually leading in a number of ventures too, but market doesn't realize it. It is what it is. It may take another quarter or two. I think that I still call it like I see it. I think that this was the last challenging quarter that they have, not ever, but over the short term, just because of the headwinds. They guided a little bit more softly with guidance, but with what they're rolling out, like there's a lot of ramp over the short term, and of course a lot of those vectors over the long term too. Going to advertising, like that was one of the great things is they kind of allowed or encouraged Dr. Mark Gaither to speak a lot more on advertising over this last quarter. And he did a lot of interviews and was asked some very direct questions, including what are PayPal's internal expectations as far as advertising. He said, well, we haven't released those publicly. We're not going to at this time, but you saw what I did at Uber, which he led that entire organization from no advertising to over $1 billion in annual run rate in just over a year, actually, if I remember right. And also at Amazon. And he's like, our ambitions are similar. I was like, all right, good enough. That's all I needed to hear. The market was like, we don't care about that. It's like, okay, you don't care about adding like $1 to $2 billion in like 18 months. That's very high margin. All right. We'll see what you think in 12 to 18 months. So yeah.
Yeah. Plus at a much larger scale than Uber. Uber is at 1.5 billion annually, growing 60%. So imagine what PayPal can do 12, 18 months from now.
And that's something that, you can see the way that that's been rolled out at other companies, not just where Dr. Mark was, but certainly at Uber and everything. And it is a different platform. It's a different way of doing this. It may take slightly longer for PayPal as well, but this isn't we'll see some meaningful revenue in like 5 years. This is like, no, like next year, they probably should bake some into guidance. So they'll be conservative as always. If they bake nothing in right now this year, but we're going to see meaningful revenue, I think, late this year, really meaningful next year, and of course in 2027 as well. So the market's asleep on PayPal, but the company is not asleep.
Yeah, for sure. I mean, like we said before the earnings call, the year-over-year comparisons, it gets easier from here, especially 2 quarters from now. It gets very easy, not only because the year-over-year comparisons are easy to beat, but because the company has been positioning itself to accelerate growth when it will reach those quarters. So it's a double tailwind. Plus they are sandbagging, right? They talked about the commerce impact that they still have baked in that nobody is seeing at the moment. I mean, I've checked a couple of comments from Sofi. They see that consumer is still quite healthy. And so have lost connection or not. I don't know, maybe.
Yeah.
No, I am back.
All right. Yeah. Well,
with that,
probably a good place to wrap. I got work to do, but it was a pleasure joining you, Neil. Thank you for having me
Yeah,
and letting
my
me co-host this with you. And we'll have to do it again next time in a less challenging quarter. Actually, very solid results, but stock price will do what it will do, and we'll see how it does over through the end of the week. But still pain pal for now, but maybe not for long.
Exactly. I'll probably stay until the market opens, but we should definitely do this again, even before SoFi and PayPal
Oh, yeah.
report earnings, because I think there is still a lot to discuss. So thank you for joining.
All right.
Have a wonderful day, because it's very early morning still for you. So we'll see each other
absolutely,
next time.
Neil. Sounds good. Have a good one.
Have a good one. All right. So I'll stick around for another couple of minutes to open the markets. In the meantime, I have a poll running. PayPal closes the day green, red, or flat. Currently, 48% say red, 32 green, 20 flat. At the time of streaming, PayPal is down 6% at the moment. 6%, while SoFi is up close to 10%. Novo Nordisk, let's see. Let's pull this one up, actually. There will be a video about SoFi, probably in an hour or so, specifically talking about that amazing quarter by the company. Let's pull... Yeah, Jose did change today, right? Looks a bit different. So, Novo Nordisk. Interesting. I know I shouldn't do a technical analysis, because that's how I got sick, but it seems like my lines here are going to work out. So the stock is down, I think, around 21% or so at the moment for Novo Nordisk. So there is news about guidance being cut and a new CEO. Now we know what happens when a new CEO comes in. Usually they put guidance quite low, so he can beat that. Now let me actually pull it up if I can find it. Let's see, latest news. Okay. This is it. So reason number one is this. In the first 6 months, so Novo Nordisk announces sales and operating profit at constant exchange rates for the first 6 months and updated full year sales and operating profit outlook. And so it comes in lower. As you can see, these were the expectations in May. Sales growth of 13 to 21%, now coming in at only 8 to 14%, and operating growth between 10 to 16% instead of 16 to 24%. The lower sales outlook is driven by lower growth expectations for the second half of 2025. This is related to lower expectations in Wegovy, GLP-1, basically in the US obesity market, lower growth expectations in Ozempic, also US GLP-1 diabetes market, as well as lower than expected penetration of Wegovy in selected IO markets here. So it is probably one of those throwing the kitchen sink type of moments, but it is very interesting what they mentioned here. And here it's basically them going on the attack, basically attacking HIMSS. So despite the expiry of the FDA grace period for mass compounding on 22nd May 2025, Novo Nordisk market research shows that unsafe and unlawful mass compounding has continued, and that multiple entities continue to market and sell compounded GLP-1s under the false guise of personalization. Novo Nordisk is pursuing multiple strategies, including litigation, to protect patients from knockoff semaglutide drugs. So basically, they are going here on the attack. You might not like this, but as an investor, I'm not an investor, but if you are an investor in Novo Nordisk, this is what you want to see. You do not want to see their IP being under attack and them not doing anything about this. I've seen someone said it actually a couple of weeks, maybe a month or so ago, saying that if they are not going to do this, it might actually be a good short option, because I mean it's their job to protect their IP. It's their fiduciary duty to shareholders to make sure that the company is not under attack like this. So we'll see what happens, how big of an impact this is going to have on Novo, and especially on HIMSS as well. Then we have a new CEO, so President and Chief Executive Officer, called Maziar Mike Dustar. Sorry if I mispronounced this, but okay. Effective August 7, he's going to succeed the previous CEO. So he is currently Novo Nordisk Executive Vice President of International Operations, has a strong track record of creating value and driving growth. Under his leadership over the past decade, Novo's international operations have more than doubled sales to approximately 112 billion Danish krones in 2024. The business includes all of Novo Nordisk's affiliates outside the United States and employs 20,000 people. So again, this is someone from inside the company, which means he knows the company already. He doesn't need that adjustment period and all of that. My question here is, since he was Executive Vice President of International Operations, he's probably also one of the people that should have seen it coming, right? Should have seen, Novo Nordisk decline coming. So I don't know how great this announcement is, to be honest. But could it be the lowest point of the company right now? Could be. Could very well be. I mean, it's every time the same thing. Incoming CEO, guidance gets reduced. Suddenly you beat guidance and you're like a genius. Yeah, okay. Makes sense. Makes sense. It's still a huge company. Unfortunately, they will have to do some fighting to get back to where they need to be. It will probably take some time. If you liked it in the 60s, you definitely should love it in the 50s. That's for sure. Market is open. You guys, I forgot. Didn't remind me of the market open. But here it is. Market is open. Novo down 21%. And we have, Sofi up 17%. Wait, let me send a message to someone. Holy moly. Wow. That's crazy. Sofi up 18%. 18% at the moment. Oof. I guess that's balancing out the PayPal impact. Because PayPal is down almost 8%. It also doesn't make much sense to me. Doesn't make any sense to me. Uber is down 2.3%. Is there any news about Uber? I see someone say Uber is literally starting a robotaxi company. Is it? Let's see if I can see something about Uber. But yeah, overall, this is how the market is looking at. I mean, Sofi, the 10% was already wow. And now we're up 17%. That's crazy. So Uber, I'm not seeing anything at the moment. Other than a price target raise at Stifel to $117. I don't other than that, I don't see anything else. So yeah, might actually be time to add a little bit more of Uber, but we have time. Yeah, price target goes up, Uber goes down. Makes total sense, right? Makes total sense. Wow, this is crazy. HIMS is down only 1.3%, so not really being affected by Novo Nordisk. Yeah, but the Lucid news was last week, right? The investment and all of that. That was last week. So nothing really new here for Uber. Novo Nordisk, we are seeing some buying action in the $55 range, just under it. So I guess that's good. I guess that's good for the stock. Again, for the company, they have some fighting to do for sure. They have some fighting to do. Sofi is, yeah, I wouldn't. I mean, we opened up 18%. Wouldn't be surprised if like we go a little bit lower. Is it time to panic and say we are overvalued or anything? By the way, it does reach that resistance back in 2021, so keep an eye out on that. Although the company today is a much better company than it was back in 2021. So that's Sofi. Again, I will probably stop streaming in 5 minutes so I can make my video. Nebius, since Jose is not here, I can talk about it. Nebius is up a little bit, back to close to $53. PayPal being down so much is, I don't get it. I don't get it. Very, very strange. Very, very strange. Buying opportunity, I think so. I think if it wasn't such a such big position for me, I think I would be buying for sure. Very good quarter, literally a triple beat, for PayPal. So I don't get it. Oscar is probably down in because United. Yeah, because United Health is down 5% or so. I still have to have a listen to the earnings call. I think United is expecting at least $16 of earnings for the year, at least, which means it's trading at what, 15 times earnings or something like that. I can't. Well, what's the price of the stock? Yeah, something like that, 15, 16. So that's that. Other than those news here, yeah, Uber. Let's see. We're now under the 50-day moving average. I don't think we'll go and revisit the 200-day one, but if we do, I'll be buying even more for sure. There is a gap here. There is a gap here all the way to $85. So that's another $3 on the downside if it ever goes that low. We'll see. AMD continues to go up. This one is overstretched, but I guess the market liked the news that came out yesterday, but it's the same news that came out 2 weeks ago about the price of the MI350s going up. But yeah, AMD expected to report next week. I will have an earnings review coming out in the next couple of days for sure. Other than that, nothing much. Again, United Health. Honestly, I thought a lot of it was already baked in, but I guess the market did not. And so we're back to the prices we've seen when it initially crashed back in May, or bottomed, should I say. We're down 4 or 5% or so. I will have a listen to the earnings call and I'll update you accordingly in a video. PayPal guidance bad? No, actually PayPal guidance beat and revised on the upside. So I do find it strange. That it was like this. Can I comment on PayPal? Well, the whole live stream, the 2-hour live stream, was basically us listening to PayPal and commenting on PayPal. But I'll do also a specific recap video on that, much shorter than a 2-hour long live stream. But in short, I like it. Good quarter, good comments. Would have liked to hear a little bit more, but it's an earnings call, not an investor day. volume. Oops. Yeah, no, my bad. Let me know if the volume now is better, because apparently the volume went down when we listened to the earnings call. But other than that, no, good quarter. Good quarter across the board. So yeah, the stock will do what the stock will do. It's pain pal, right? It's pain pal, but I'd be surprised if we don't see a lot more buying action throughout the day, for sure. So yeah, that's about it for me. In this live stream, I have a lot of earnings recap videos to make. And so that's what I will do right now. Expect a Sofi, PayPal, maybe a United Health / Novo Nordisk video to come out later today or maybe tomorrow. Tomorrow we have maybe a short live stream in the morning and then a long live stream in the afternoon, evening, because Meta, Microsoft, ARM, Qualcomm are reporting tomorrow. And tomorrow Jose is back. The real Jose is back. So yeah, that's about it. PayPal, overreaction by the market. Very, very good quarter. I'll update you in another video. SoFi, insane quarter. And so yeah, maybe we'll start or stop hearing this. But it's not a tech company and blah blah blah. It's growing like a tech company. If it's growing like a tech company, quacks like a tech company, it's a tech company. With that, I'll leave you